Everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, the non-farm payrolls report was released today and it was pretty much in line with expectations. However, it was the lowest reading since April of 2021. The unemployment rate ticked up to, well, that 3.7 is such a bogus number. The household unemployment number is more accurate. It shows that the unemployment rate, the real unemployment rate, is about 7%, not that 3.7% number that the government released today. And in addition to that, wages crept up again, up 5%, so wage inflation continues. Interest rates back down again today. Is it the same thing from last Friday? And the market is right down around 390. Most people felt, if you listen to the market pundits at the beginning of the week, that last Friday's sell-off on the back of Chairman Powell's comments out of Jackson Hole was overdone. But that proved not to be true. There were a couple of pundits that said, hey, they see some support around 390. That's exactly where we are. So where do we go from here? Let's take a look at the charts. At the time of this recording, it is late on Friday evening, so the futures market is closed. Before we get to the charts, if you like these videos, please don't forget to hit that like button, or better yet, hit subscribe and be notified immediately when one of these videos is posted. Thanks, we really do appreciate it. All right, taking a look at the charts, here's where we are. As you can see, I talked about in the intro the 390 level, and if you look at the low yesterday and the low today, both of them exactly at 390. The difference being what happened at the open today. Seemed like the market kind of liked that non-farm payrolls number. But if we go back to Tuesday night, and this is what we were talking about during TradeFinder Tuesday night, you could see that there was a little bit of separation closing near the low from the 10-day moving average. If you watched any of my videos, you know that one of my rules of the market is no security in any time frame gets very far away from the 10-day moving average. So we were a little bit oversold, and that was going to have to be corrected. If you look at that, if you wanted to go short from this point in time, perhaps waiting until you got to move back up towards that 10-day moving average might make sense. And then as we advance the chart each day, you can see that, boom, there we were on the open today at the high of the day, basically back tapping that 10-day moving average and then closing near the low of the day, again, right there at that 390 level. So if we look at 390 right through here, you can see that, well, there is a little bit of support there, but where do we go from here? I think you want to look at volume. We talked about volume in Tuesday night's TradeFinder as well. By the way, if you haven't attended a TradeFinder, please do so. You can register right underneath this video or go to our website at ewotrader.com. It's free. We do it every Tuesday night at 9 p.m. Eastern Time. We talk the markets, we look for trade ideas, and we have a live Q&A at the end. It's a lot of fun. Love to have you. Please join us in a future TradeFinder. All right, so what we talked about is the fact that on the way down, volume had been lower. We did have just barely above average on last Friday's big sell-off, and then the volume was below average the rest of the week until today. And today, remember, big reversal from 300 points up to 300 points down on the Dow. So having a big reversal day like that with, again, slightly above average volume is just simply not bullish for the market. So when we take a look at this and where that wave 5 is, can we make it that low? Well, we break down below 390, which does look like it's likely at this point in time. There's a little bit of support here at 380. So we'll probably move down to 380 in a very short period of time. And then do we make it down to that wave 5 low will be the question. The only thing standing between us and that once we get to 380 is that wave 3 low that occurred way back on June 17th with that doji there. Taking a look at the VIX, the market VIX. See, this is one of the things that would trouble me the most if I was really bullish on the market. I don't happen to be really bullish on the market, but I see all your comments on YouTube. I know a lot of you are. That's what makes the markets. People have differing opinions. Some are thinking the market's going to go up, some think it's going to go down. That's how the markets work, and it's a great system. But when you see the fact that we're really only at a 25 VIX and this move to the downside here, can 390 hold with the VIX at 25? Doesn't make sense to me. Maybe it does. The market often does things that don't make sense to me. So the market doesn't really care what I think or what makes sense to me. But from years of experience, and I've been doing this for over 25 years, I just can't see this being the low without a spike higher in the VIX. It feels like we're going to have something more cathartic, especially with as really brutal Chairman Powell's speech was last Friday night. Looking at interest rates, and this is a repeat of what happened last Friday, where we had things come down on his speech, and people were confused by that. It's because money was moving into the bond market, leaving the equities market, moving into the bond market. It goes back and forth all the time. Yesterday, we talked about this in last night's TradeFinder, which is a meeting that we do, a webinar we do every Thursday night for our alert subscribers, those that subscribe to our alert service at ewotrader.com. The fact that we had this gap up and we probably would need to come back down. We said that might not be a positive for Friday's market, because for that gap to get filled and rates to come back down, when you're in a period where the Federal Reserve is clearly raising rates, they're committed to doing it, they have no end in sight of when they're going to do it, rates should go up. So what can make rates come back down? Money moving into the bond market. Remember, we talked about this last week. When money moves into the bond market, prices go up, yields and rates move down. Prices and rates move in inverse proportion. Same exact thing happening today. We had a big reversal in the equities market. Money went in to the bond market to park for the weekend. We'll see how that plays out at the beginning of next week. But we're on this nice 45-degree angle march towards significantly new highs, I think, on the 10-year. And I don't see how that's positive for the bond market or the equities market either. I guess it is a positive for the bond market, but not for the equities market. Looking at the dollar, you would think the dollar would stay strong, and it did. Bit of a doji there. You can see the dragonfly doji right there where the open and the close are right at the same near the high of the day. But we showed you the zigzag pattern last week. I won't draw that again. It looks like the dollar wants to go to 112. If you didn't watch last week's video, go back and you can see where the layout is of that zigzag pattern and the C-wave extension taking the dollar up to about 112. Looking at the rest of our markets on the Dow, some of these things are going to be similar, but take a look at this. One of the things that's really interesting about the Dow is the volume is much lower. And we kind of talked about that both Tuesday night and Thursday night on the fact that the Dow is becoming the value side of the market. Didn't used to be. Years ago, the Dow was the big grower. It's the industrial companies. It's the top 30 industrial companies. That's going back a ways. Now it's kind of been replaced by the S&P, the blue chips. But now we're looking at the Dow being more value-oriented, and the selling just hasn't been as severe. It's still moving down, but on much lower volume than what we're seeing on the S&P, and you can see that we have some pretty good support here on the diamonds right around 310, not too far away. Looking at the 10-day moving average, also tapping that 10-day moving average on the high of the day. Looking at the Qs, you would expect, okay, we're probably going to have a little higher volume there. And we did, but still just a hair under average. Certainly more volume than the Dow, slightly less than the S&P, but the Qs have been hit much harder than the S&P has with this move down on the wave 5 extending 118%. We showed you how this retracement here was an exact 61.8% retracement. That is Elliott wave spot on, and now we have a new impulse move. So how far will this impulse move occur to the downside? Where do we find support? When can we look for a bounce? You know, there is some congestion right in this area right through here, but it looks to me like the Qs want to come down and try that 280 level again. Now, whether or not they break to new lows, that's something else that will have to be decided down the road. But for now, it looks like there's a pathway to 280. And you look at the 10-day moving average, didn't quite tap the 10-day moving average on the high. Once again, kind of slightly underperforming, but just barely what the rest of the market did. And then you look at the Russell. Now this one's the one that surprises me the most. I mean, we moved to the downside, but we kind of hung in there. On the high, we closed the gap that we had on the downward move in yesterday's trade. So we closed that gap today, but we closed right at 180. So 390 on the S&P, 180 on the IWM, which means nothing because the trading range, as we've talked about so many times, is between 190 and 170, so we're smack in the middle there. You really, to go long or short the IWM, you would want to move back above 190 to go long, down below 170 to go short. Anything in here, really the smart thing to do is just kind of sit on your hands and wait until you get the stronger signal. All three major moving averages converging just above where the high of the day was, but below 190, and that's the key there. Is that wave 5? Now that's the one that seems to be, can the wave 5 get that low? That's the one that's a bit more suspect, but we did have a perfect 50% wave 4 correction, so with that being a target price, you have to keep it in mind. I don't think that occurs without some sort of really wild spike in the VIX. Maybe even one of those black swan events occurring like China, Taiwan, something along those lines. I thought I would highlight Tesla, both Tuesday night during TradeFinder and Thursday night in the Insiders meeting. When we get to the Q&A, by the way, in the Insiders meeting, if you're an alert subscriber, we do a full 45-minute Q&A. And with Tesla, even post-split, we had this triangle here, just a really nice symmetrical triangle, and we've broken to the downside. It's just following Elliott wave corrective triangle rules. You look at the mouth of the triangle to give you an idea of where the move should occur, and if you're wondering where that is, 260 is the price target. We're not that far away, and there just happens to be a tremendous amount of support right there in the 260 area. So it does look like Tesla wants to come down, test 260, and then we'll see. Can it hold that? Also tapping the 10-day moving average on the high. A lot of people looking kind of at Tesla. Apple used to be, it still kind of is, the bellwether for the market, but so many people look at Tesla now for that same type of thing. So tapping the 10-day moving average on the high, and again, I think it comes down to 260. Looking at some of our international markets on the EWA for Australia, close that gap, but kind of impressed that it didn't make a new low today, didn't even make it down to yesterday's low. It's trying desperately to hold this 22 level. Open there, traded above it. It did close below it, but that is not a follow-through day. So it broke below it yesterday, but if you've watched any of my videos, you know you have to have a second day, a follow-through, a confirmation day when you break a major support area or break above resistance, break a major moving average or break out of a triangle, etc. It's really important to have that second day, the follow-through confirmation day. That didn't occur today. All we did was fill this gap. So it's trying to hold 22, and if it can't, it's going to see 21 pretty quickly. But if we can get back above 22, then we have resistance at 23. So you can see that a trading range may be in order for the EWA here between 21 and 23. At least that's where we are now. Looking at Canada, yikes, it was just vertically down until today. And we moved back up, filled that gap, traded higher throughout the trading day. 35 was the big level to watch there on the EWC. We broke below that just like nothing, just like a knife through warm butter. And then if we look at the 10-day moving average there, didn't quite tap the 10-day moving average on the EWC either. So perhaps early next week we get a little bit more of a bounce because we're still slightly oversold on the low of the day, but we did fill that gap. And the other thing that's encouraging if you're long the Canadian market or want to be long the market is we came down to that 33 level yesterday and held it, closed higher, and filled this gap. But how long have we held it? At least for now, 33 has held, and that's the key level if you're trading the EWC. Watch that. Bitcoin trading again below 20,000. At the time of this recording, it's slightly below 20,000. And I talked about this both Tuesday night and Thursday night as well, because you can see nothing's happened for the last 4 days other than the exact same thing where it's traded below 20,000 intraday, and it's just clinging like fingernails on a cliff to that 20,000 level. Now we had talked about, it's done everything it was supposed to do. We talked about this ascending triangle. We also talked about how an ascending triangle does not mean that you're going to get an upside breakout. You can break either direction. Proof here, broke to the downside. It was going to be a 4,000 point move, and it's exactly what it did. Move 4,000 points down to 20,000. Had it broken to the upside, it would have gone up and tested 28,000. How long can we hold 20,000? Well, the longer we hold this level, the better chance we have of bouncing. But there's not a whole lot between here and 16 or 12,000 moving lower, so that's why the longs, the bulls on Bitcoin are trying desperately to hold this level. Every time it tries to break it intraday, buying comes in. So as I said, at the time of this recording, slightly below 20,000. Who knows where we'll be next week, but not enough to really call it a break of that level. Now, y'all wrote in last week, during last week's recording. I do read every post that you make on these, and some of you asked for, well, what about the UK? All right, well, here's the chart of the EWU, the UK market, and one of the things you look at here, first blush, is that the wave 5 extended 121%, and you're looking for a bounce. However, located within this wave 5 is a really classic zigzag pattern. Check this out. Right at the 61.8% fib level on the B wave correction. Can't get any more Elliott wave than that. 61.8% fib level in my mind is the strongest level. And it held there perfectly, and I love zigzags that have a 61.8% B wave correction because quite often they come down and hit their 100% extension. So if that holds true, that means that the low on the EWU is somewhere down around 26 and change, maybe slightly above that. If you look at the 10-day moving average, more oversold in the EWU than any of the other markets, so a little bit of an early bounce in the week next week wouldn't surprise me, but we did trade below that low that occurred back on the 14th of July yesterday, so be careful if you're trying to go long or pick a bottom there in the EWU. It doesn't look like it's there yet. And don't get lulled in if we get a bounce to the upside before then. And then you also ask about Japan. And so here's an interesting chart, I think, of the EWJ. And you can look at this. All these, if you're not interested in the international markets, you only want to trade the U.S. markets, well, all these symbols are tradable on the U.S. markets. So it's important to pay attention to them, in my opinion. Now, when you look at this, we're nearing a major point of support here on the EWJ, looking at that 52 level that held all the way back to mid-June, tested it at the end of June and early July, mid-July. Then we got a little bit of a bounce, went right back up to resistance, exactly where you would have thought there'd be resistance back here in April and May. And so we tested that level, and now we're back here. So if you're along the EWJ, you could take a shot here, but if it breaks below 52, that's your stop. So you have a really tight stop there. Because if it breaks below 52, watch out below on the EWJ. It hasn't done it yet. Also, a bit oversold here on the EWJ, so perhaps we get a little bit of a bounce there, very similar to the chart on the EWU. I did want to add in India because that chart has been so impressively strong. So let's take a look at where the INDA is, and it's still hanging in there. Look at how well it's doing, holding this 43 level. Even though it had a down day today, it's still right in that level, still above the 50-day moving average, traded kind of right through the 10-day moving average, which it has over the last almost 2 weeks there. But pretty impressive that it's holding there. It hasn't quite disqualified this 5-wave pattern, but it's awfully close. But you have to look at the India market and say, hey, it's held in there stronger than any of the other global markets that we look at. So pretty impressive there. The story remains the same, but I thought I would share that with you because some of you may have been wondering, did it break that 43 level? Not really, not yet. It's hung in there pretty well. Hope everybody has a great holiday weekend. Look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.